financial statement, but ideally an audited financial statement, which doesn't mean like a tax audit where the IRS is coming in and, show me your bank account. Let me see if you owe more tax. It's an independent CPA coming in, confirming balances, confirming that the financials are accurate. So that's the kind of the difference between those two.
By the way, if you're buying a business too, you might want to ask for that.
Yeah. Oh, absolutely. Yeah. Because you can't imagine how many books are not accurate.
Oh no, I've seen a few. I've worked with some
Yeah.
clients that have bought some businesses that they did not ask for that. So,
Yeah. Definitely.
you touched on something. We'll have two questions for you. I'll give you the easy one first. What is one of the biggest mistakes you see companies make that come to you as it relates to taxes and tax planning? I think you suggested it. Don't wait until tax season to make your decisions.
Yeah.
But is that one of the biggest mistakes, or what do you see?
I would say maybe it's not the most common mistake, but it's more common than I think people realize is the first and most important thing to do, which is going to sound obvious, is just file and pay your taxes.
Mm-hmm.
Like so many business owners, they're used to this, they're a W-2 employee and then they have an entrepreneurial seizure and start their business. And they're used to having their taxes withheld and maybe usually getting a refund at tax time and not owing. And then they get busy because they're just trying to run their business and grow their business. And then suddenly 1, 2, 3 years goes by and they haven't filed. And then it becomes this big mess. They don't have books. And then it just becomes this mountain that they feel like they're trying to climb out of. And it's a huge distraction from actually running your business well. Mm-hmm. So I'll just say from the very beginning, file and pay your taxes on time every year. Even if you file an extension, just file them every year. Don't wait and let it slip by, because then it just becomes this huge amount. Assuming that you're filing and paying your taxes currently, the next best thing you can do is actually have a good set of books, because that's the foundation of all tax planning. And so keep current and accurate on your numbers. And most people who are entrepreneurially minded hate doing books. And so pay a bookkeeper to do it for you if you know yourself and that's you. And then third, as you kind of hinted at, is actually do tax planning. And at the very least, you want to meet with your CPA kind of sometime between late October and early December to run year-to-date numbers. Here's what tax laws have changed. Here's how to take advantage of that. And here's a list of action items to do before the end of the year. But if your business is growing fast, like call it more than 20% year over year, then you should be meeting at least a couple times a year, because when you're growing like that, you're growing in dog years. So your business in March looks a lot different than your business in September in terms of infrastructure, expenses, and also potential tax strategies that are available to you.
Yeah.
And so tax planning is huge.
Great pieces of advice. By the way, I was that entrepreneur. I let a couple years go by in one of my businesses, and I knew how to make money. I just didn't track it very well. And you're right; it becomes a distraction behind, in the back scenes. You're always thinking, gosh, I got to get my taxes done. And ultimately it starts to chew away at you the importance of something that you've missed, right? So when I advise entrepreneurs on starting businesses, I said, look, don't forget to budget for your accountant and your tax seasons and the time that you need to spend with that CPA. Right from the get-go.
Speaking of that budget, just to echo that, I was at a business event a couple of years ago, and Mr. Wonderful from Shark Tank was the one of the speakers, and I had to ask him a question about my business and taxes and all that, and he gave me a nice endorsement in that he said, every business I invest in or open, the very first dollar I spend is on a good account.
Awesome.
And I was in a room of like 100 business owners, and I was like, thank you, Mr. Wonderful. This is great. I'll be in the back if anyone wants to chat.
On your resource tab, one of the tabs talk about, finding money, borrowing money, writing a loan, stuff like that. And something caught my eye about borrowing money and walking into the bank, and you suggested if you come into the bank prepared with good books, good records, you're more likely to get a loan instead of getting that big red flag like, hey, this guy doesn't know what he's doing. And I don't think people think about that, as well as the opportunities that exist if you've done a good job with your bookkeeping.
Yeah. Yeah, well, and the other piece of it is sometimes they like to get a little too creative, if you will, with deductions,
Mm-hmm.
and they end up, they don't want to pay the tax, so they take a bunch of deductions or pay a bunch of expenses, and then suddenly their income's too when they go to borrow, their income's too low
Hmm.
to qualify. And so, one of the biggest pieces related to lending, I'm glad you asked about it. One of the biggest pieces of tax planning is your borrowing needs coming up, because essentially paying your taxes is buying your borrowing power. And so let's say if you need to, borrow $500,000 because you're trying to get some rental properties or trying to buy your own home. Let's say, what do we need to have your income be to qualify for that loan? So we bring it down to that, but not below that. So you save taxes, but still have enough income to meet your other financial goals.
Yeah.
Otherwise, you could shoot yourself in the foot big time. I used to have a bunch of realtors as clients. I still do, but that was a large chunk of my practice, and all of them know exactly what it's like to lose a deal because their client can't qualify because they took too many deductions. But yeah, having your books up to date and records up to date up to the most recent month. So, usually by about the 10th of the month, closing out and reconciling your previous month books is going to help so that, when you get to that sort of urgent situation of you need to borrow, you're not scrambling to catch up 2 years of accounting records at the same time.
Yeah.
With all these accountants that are busy and overwhelmed because there's no one available to do the work.
Well, yeah, sure. We've talked about that. And the reality is the money that you would invest in a good CPA could pay off tenfold, not only in tax savings and understanding your business and forecasting and knowing where to go, but that money could also be leveraged that you're saving through, bank loans or borrows or different things that you're trying to do down the road because you've invested up front.
Absolutely. So your CPA should be a profit center for you, not a cost center. If they're
Mm.
not, you need to find a new one.
Mm.
And because whether on the tax side of things, they're going to be a profit center for you because they should save you more taxes than you're paying, in their fee. On the accounting side of things, having those good records is going to allow you to analyze your profitability and find hidden profit in probably areas that you're spending too much money in. And then on the audit or review side of things, if you have a lot of equipment you buy on loans or that you invest in and have a lot of debt that you carry as part of your business, the amount of money that you're going to save in a lower interest rate because you're a lower risk if you have an audited financial statement is going to more than pay for the cost of the audit too, in almost every case.
Yeah.
And so across the board, your accountant should be a profit center for you, not a cost center.
It's the first time I've heard that term, but I've certainly seen the benefits of having a good CPA accountant in my businesses, and I've seen the results of not having a good one either. So thank you for that. Speaking of being a good one, this is just kind of a left turn for you, but what type of pressure is it when you're working with Tony Robbins on the big stage?
Tony's great. Tony is, the one thing I'll say about Tony is that he's congruent.
Mm-hmm.
Like he truly cares and like the mission that he talks about at his events and from the stage and everything he does. He, like when you're behind the scenes and texting with him, or like he truly does care. And he's usually getting back to me at 3 a.m. and hasn't gone to bed yet. Like, so he's putting in all the time. And as far as the pressure goes to live up to that standard, he's the best to ever do it in his business. And that stage is, a coveted stage for a lot of people. And so it's a super big honor for me to be able to teach taxes from, business mastery and just kind of be able to say that I'm partners with Tony Robbins. And so that definitely comes with a standard that we try to uphold. And so when we got, because we became partners, it's coming up on 3 years ago now. And so the second we got that kind of contract over of, we're joint ventured with, Tony Robbins companies, one of his 106 companies that he's an owner of. Whenever he shares that, I'm like, we're one of those. We kind of say, okay, like we got to level up now, so it's, it's an honor and a privilege, absolutely, and it's also some good accountability to live a higher standard.
Yeah, I like that term, level up. We had interviewed on the show a gentleman by the name of Stu Massengale last year. He's part of Tony's crew, I think, on the marketing side, as well as doing some public speaking, entry for his events and stuff like that. And it's just such a fascinating organization. I love that you brought up that you might get a message from him at 3 a.m. because, people on the outside look at successful people and they only look at, the glamour. They don't know how much work goes into that. And you talk about leveling up. I'm sure you guys put in your hours to be at that level and be in his circle.
Yeah. I mean, it's funny. It was sort of a 3 years in the making process of becoming partners with Tony. And I mean, he has one of his most uttered phrases is things happen for you, not to you. And our becoming partners with Tony was a perfect example of that. So how that even came about was I was in another mastermind. It was right when I had first become partners with my dad. And he said, I don't want to take a cut and pay to bring you on as a partner. So let's grow. And so I started like, hey, let's grow. And so I joined this other mastermind group and kind of became known as the tax guy in there and got asked to teach a 90-day course on taxes and personal finance. And about half the people who registered for the course were Canadian. Mm-hmm. And I don't know Canadian tax law. It's a totally different thing. And so I reached out, got connected with this other Canadian CPA to see if he wanted to guest teach. And turns out he was the Canadian version at the time of what I am now with Tony. Told me about the whole Global Accounting Advisors program. I said, that sounds like something I'd be interested in. And we cold emailed the guy who kind of founded the program with Tony. His name's Paul. He's Australian. And he said, tell me about your business. And so we did. And it was at the time we were 4 people. It was that kind of smaller firm. So we got a meeting with him. And he's in Australia, so it was at 10 o'clock at night, our time. And so right the day before the meeting, my dad emails him and says, hey, can we reschedule to a time that overlaps our business days because that's late at night for us? And he said, sure, we can reschedule. Well, 2.5 years later, we finally got a meeting. But in the meantime, we wanted to grow this thing. So I started posting social media, started building and just stayed in touch every couple months. Hey, Paul, can we get that meeting? And with 10,000 followers, I really think that I'd be a good fit. We add value. Hey, Paul, just want to check in with 40,000 followers. Hey, Paul, here's this Forbes article I wrote, and just, kind of kept building it. Yeah. And in the meantime, finally, and 2.5 years later, hey, Tyler, are you free on July 22nd for a quick 15 minutes? And in the meantime, we had grown from 4 people to, I think we were at about 25 people at that time. And so we hopped on the call, and he said, tell me about your business. And so we explained where we'd gone in that amount of time. He said, well, hey, if you can hop on a flight to Vegas in 2 weeks to come to Business Mastery, the partnership's yours. Because we'd start, pending due diligence and all this, background, all that stuff. But in the meantime, we had built the muscle of growth so that when we went to Business Mastery and did our 150 meetings in 5 days, and all the clients that came from that, we had built the muscle of growth. Because if we had gotten that partnership back in 2017, when we were first barely starting to grow, it would have just totally just blown us up. Yeah. Right? Yeah. And so we built that muscle of growth. And then, at the time I became partners with Tony, but Tony didn't know who I was. I was one of 106 companies. And then we went to 2 Business Mastery events, and then COVID hit. And we started doing PPP loans and helping people with PPP, consult on that. And we were email blasting everybody, including the attendees that we had met with at Business Mastery. And somehow one of those emails got forwarded to Tony's CFO. Mm-hmm. And I got an email forwarded, from Tony, from his CFO. Hey, Tyler, do you have time to chat about this email? And I said, well, Tony's CFO calls, sure. And so we pick up the phone. He said, tell me about what you're doing with these PPP loans. I said, we're helping consult on, how to lower, whether you should take the loan or not. I said, great, hung up. I was, it was kind of cool. I got to talk with Tony's CFO. And then a couple hours later, I got a text from him and said, hey, Tyler, are you free to hop on a Zoom call in about 10 minutes with me and Tony? And I was, okay,
Yeah.
sure.
Yeah.
And we ended up being on the call for about 3 or 4 hours, going through all the PPP